Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to study the conceptual framework for financial reporting, what it's all about and what it entails. The conceptual framework for financial reporting. And this is a framework that features in almost every exam as far as financial reporting or corporate reporting is concerned, at both undergraduate, postgraduate, and at the professional level. And it is some kind of theory that many people don't pay attention to in their study of financial reporting, but can really give you some valuable marks in your exam. And the understanding of this conceptual framework will help you to be a better person of yourself as far as your accountancy profession is concerned, because this is more like a manual that guides accountants in the way that they should present financial statements. So I'm going to take you through the conceptual framework. Now, this conceptual framework was developed by the International Accounting Standard Board, which we call the IASB. The International Accounting Standard Board's conceptual framework. So most time you see it's being labeled as the IASB's conceptual framework. Instead of seeing just the conceptual framework, you see the IASB's conceptual framework because it was developed by the International Accounting Standard Board. And the reason why they developed this conceptual framework is that it will serve as a guide for the accountancy profession in the way we treat, all over the world, accounting is happening. And from organization to organization, there are some unique specifics that differ. However, the underlying principles become the same and the transactions become similar because of the harmonization of these standards. So what we are trying to say is that the conceptual framework was developed by the International Accounting Standard Board so that it will guide us in the way financial statements will be presented. So it will guide accountants in the presentation of financial statements, and even it will give us some fundamental principles of how some like items should be treated in the financial statements. Now, I'm going to take you through the conceptual framework. There are about 7 different items that are mentioned or talked about in the financial statement, and I'm going to take you through all of them. But before that, I want us to look at the purpose of the conceptual framework. Why was it developed in the first place? And then we'll look at the components of financial statements, and then we'll come to the issues that are dealt with in the conceptual framework. So without wasting my time, let us look at the purpose and status of the conceptual framework. What the conceptual framework seeks to achieve. Okay, what the conceptual framework seeks to achieve. And I'm going to mention about 6 or 7 points for you that are part of the purpose. Now, take note, when it comes to the conceptual framework, whatever I'm going to teach you here is what is contained in the conceptual framework. And therefore, you need to study and reproduce them in your exam as it is. Okay, so we are looking at the conceptual framework. What is the purpose? So you can be asked the purpose of the conceptual framework, or what is there to achieve, the status of the conceptual framework. Why was the conceptual framework developed? So we are talking about the reason for its development in the first place by the International Accounting Standard Board. And these are the reasons why the conceptual framework was established. And take note that each of these points that I'm mentioning are highly examinable. This purpose is highly examinable in any exam. Likewise, the others that I'm going to mention. And I know that in every financial reporting or proper financial reporting exam, there should be a question that is featuring from conceptual framework. However, you cannot tell which part of the conceptual framework will be examined in your paper. So take your time and listen carefully, and then learn how to present your answer. Because I'm not just going to explain or talk about them, but I'm going to tell you how to answer your questions, and I'm going to guide you into how to maybe make some easy memorization of some of the things, because it looks a little bulky. That is why I'm taking my time to talk about them this way. All right, so let's look at the purpose of the conceptual framework. When it comes to the purpose of the framework, I developed a very funny way of remembering it with my students. I call it assist. So every point that I'm going to mention or raise for you begins with the word assist. So when you are asked to reproduce the purpose of the conceptual framework, you can say the assists. They are all assisting. So the first one begins with assist. The second one begins with assist. The third one begins with assist. All the points that I'm going to mention begins with assist. That is why I'm saying that the purpose of the conceptual framework is about assisting. So let me give you a reason why they are all assisting and not. Because when we say something is an assistant or somebody is an assistant, it means that they are not the leaders. They come in to help the work, or they come in to help the leader carry out their vision. So the leaders are the IFRS, the International Accounting Standards themselves. We know that every accounting heading or item has a standard regulating it. Now, this conceptual framework do not override the work of the accounting standards. This framework only comes in to assist, to enhance the way we apply the standards. So in an event where there is a conflict as to the instruction given in the standard and the instruction given in the conceptual framework, that which is given by the standard should be followed, because the standard supersedes the conceptual framework. That is why in talking about the purpose of the conceptual framework, the International Accounting Standard Board really made mention of assisting throughout. And so every point that I'm going to raise for you will begin with what? An assist. And I'm going to display that on your screen and talk about. I'm not going to write them because they are lengthy. So I'm going to display them on your screens and then we talk about them. Now, the first purpose of the conceptual framework, and you see, as I display on the screen, I'm going to help you link them so that it will be easy to remember when you are writing any exam. The first one, I will say that to assist the IASB, so IASB here talks about International Accounting Standard Board, to assist the IASB in the development of future accounting standards and in its review of existing accounting standards. So the first one is about development of standards. So the International Accounting Standard Board themselves are the body that sits to develop the accounting standard for each accounting heading. And we are saying that the conceptual framework comes in to assist them. So it is assisting the board itself, the IASB, the board. You see, as I'm going to take you through, you see that the first one is assisting the board. The second one will also assist the board in something else. Then it will also assist national standard setting committees. Then it will come to assist the accountant itself or himself. And then it will also assist the users of the account. It's also assist auditors in something. So it's going to assist these people that are key stakeholders in the accountancy profession. The conceptual framework comes in to assist them in so many of their duties. And I'm saying that the first one is that it assists the IASB or the International Accounting Standard Board in the development of future accounting standards and in the review of existing standards. So the conceptual framework does an assistance. So when they want to develop any new accounting standard in the future, the conceptual framework comes in to assist. And then also, if there is already an accounting standard that needs a review, the conceptual framework comes in to help that review. And it is assisting the IASB, the board, because the board does this work. So that is the first point, assisting the IASB in developing future accounting standards and then reviewing of existing ones. Now we go to the second point. The conceptual framework also serves to assist the IASB, the same International Accounting Standard Board, by providing a basis for reducing the number of alternative accounting treatments. So first point, it was assisting the board, the IASB. Second point is also assisting the same board. Assist. So assisting the IASB by providing a basis for reducing the number of alternative treatments, so that when it comes to one transaction or one item of activity, monetary activity in a business, the conceptual framework wants to help. You know, the IASB themselves, the board wants to reduce the way there are alternative treatments. That is why, as at now, when it comes to inventory valuation, for example, and the IAS2, initially there were so many alternative treatments that you can use to do the valuation. You could use the FIFO, you could use the LIFO, you could use the weighted average, you could use the simple average, and then the standard price and all that. Now, the LIFO and then the simple average has been scrapped by the board. So they are trying to always reduce the number of alternative treatments so that financial statements can be easily comparable. The reason why they are trying to reduce the number of alternative treatments is to enhance comparability of financial statements so that it will not be like company A is using the LIFO method, company B is using simple average, company C is using weighted, company D is using the FIFO. So what we are trying to do is that we reduce the number of alternative treatments. That is why when you come to even depreciation, we have the straight line method, reducing balance method, some of the years again method, production method. You know, most of they are trying to reduce so that the most common ones or the common tool that we use across the world is now the straight line method and the reducing balance method. Hardly will you hear an organization going by the sum of the years they get method or the production method or whatever revalue. So what we are trying to say is that this conceptual framework comes to assist the board, the IASB, by providing a basis, okay? So it provides a basis for reducing the number of alternative treatments when it comes to accounting transactions. That is the second point. And then let's look at the third point. The purpose of the framework is to assist national standard setting bodies in developing national standards. So now they have left the board. They are on the national standard setting bodies. So first one, it was assisting the ISB. Second one is assisted the ISB. Third point, we are assisting now. We have moved. No, the ISB is for the whole world. Now, the national standard setting bodies are country specific. That is why if you come to Ghana, we have the Institute of Chartered Accountants Ghana. If you go to Nigeria, they have the Institute of Chartered Accountants Nigeria. If you go to the UK, they have Institute of Chartered Accountants in England and Wales. Okay, if you go to India, they have the Institute of Chartered Accountants in India. These are national standard setting bodies, and the conceptual framework comes to assist these bodies in developing national specific standards. Of course, these national standards will not override the international standards. However, they come in to coin the international standards in a way that will suit the country's economy and the way they do things there, but wouldn't be overriding that of the international. So we try to make country-specific rules for reporting in financials or financial reporting, and that is what the conceptual framework comes to do. So the third point, it assists national standard setting bodies in developing national standards. So we are still assisting. If it is in football terms, we say that you are assisting for a goal. So yes, they are assisting the IFRS to achieve their goal. So that is the purpose of this framework. And then the fourth point is assist accountants to apply relevant accounting standards in preparing financial statements and in dealing with topics that do not form the subject of international accounting standards. So now they have assisted the board twice. They have assisted national standard setting bodies, and now they are assisting accountants themselves. Now, what are they assisting accountants to do? The conceptual framework is assisting accountants in applying the relevant accounting standards. So whenever there is an item of expenditure, income, or whatever transaction that happens in the business, the conceptual framework serves as a guide to assist the accountant as to how to treat that item. So if you see that this is inventory item, you refer to IAS2. If this is maybe asset that is losing value, you can refer to impairment. The conceptual frameworks assist you to do that. And then also, in dealing with topics that do not form the subject of the IAS. Now, there are times where, as an accountant in business, you would encounter a transaction that you would not know which financial reporting standards to apply. Okay, there is no standard regarding that particular item. So when it happens, you refer to the conceptual framework. The conceptual framework will assist you to deal with that particular outlier of a transaction. And that is what the purpose of the conceptual framework is about. This is very understandable, and I hope that you follow as we move on. Now, the fifth point that I'm going to read is to assist accountants in forming an opinion as to whether financial statements conform with relevant accounting standards or not. Okay, so it's assisting the same accountants, and here the accountants here, it's more of auditors. Okay, Because one, it has assisted the board twice, assisted the national bodies. Now it has dropped to the level of the accountants and the same accountants who are now auditors. So the conceptual framework helps the auditors or accountants to form an opinion as to whether the financial statements conform with the relevant accounting standards. That is what it's assisting the accountants to do. Okay, so now it has assisted the board twice, it has assisted the national bodies, and it has assisted accountants twice. Now it's going to assist finally the users of financial statements. So look at the next point. Assist users of financial statements in interpreting the information contained in financial statements prepared in conformity with the international accounting standards. So that is the final point that I'm mentioning to you here under the purpose of the conceptual framework. It's going to assist now the users. So look at the levels. It dropped from assisting the IASBs 2 times. So it assisted the IASBs twice times 2. Then it dropped to the level of the national standard setting bodies 1 time. Then it dropped to the level of the accountants itself, assisting them 2 times. And then now it has dropped from accountants who prepare the financial statement to the users of financial statement. It's going to assist the users to be able to understand what has been prepared. So when the user of financial statement will pick the financial statement that has been prepared using the accounting standards, if the user will understand what is there, the conceptual framework helps or assists you to understand. As we move on, you see that the conceptual framework has structured the way even financial statements will be presented, and it comes in to help IAS 1 so that when the user picks the account, it's easier to differentiate which one is for profit and which one is for cash flows. So the conceptual framework is an organizer that has come to help even users understand the financial statement. So if you know you are going to forget, let us go with this approach that I've used so that this is going to help you study and you will never forget. So that when it drops in your exam, you'll be able to recall. The first thing you have to remember is that when you are asked about the purpose of financial statement, it is about assisting. Everything is assist. So the conceptual framework assists the IASBs in 2 different ways. One, it assists them in setting standards and reviewing standards. The second assisting is that it assists them to provide the basis to reduce the number of alternative treatments. Then it comes to assist national standards setting bodies to set national standards. Then it assists accountants, 1, in the preparation of financial statement, 2, in determining whether the financial statement conforms with the IAS. And finally, it assists the users to be able to comprehend what the accountant has prepared. So this is the purpose of the conceptual framework. Okay. Now, having understood the purpose of the conceptual framework, now let us look at the components of financial statement. After looking at the components of financial statement that has been set out by the conceptual framework, then we can now look at the content of the conceptual framework itself. So we are still not yet at the content. We are looking at the purpose, and then we are also looking at the components of financial statement. And as I move forward, I'm going to differentiate for you the components of financial statement and the elements of financial statement. But now in this video, I'm going to talk about the components. And I know that in exam, most students confuse the components with the elements. So let me look at the components of financial statement as enshrined by the conceptual framework. Components of financial statement. Now, when we talk about the components of financial statement, we are talking about what makes up financial statements. So when we say that the company has published their financial statement, what is the makeup? What statements specifically were prepared? Because we are saying financial statements. There is an S. Components. There is an S. So components of financial statements. So we are looking at certain accounts or reports that has been prepared together, of which we can call financial statement. Okay. Now there are 5 key things here that will be prepared. In fact, 4 major statements are prepared. The other one is explaining the 4. And then the first, these are the components of financial statement. For a standard set of financial statements, you need to prepare your statements of profit or loss. Now, let me mention them. The statement of profit or loss and other comprehensive income. Then you prepare the statement of changes in equity. Then you prepare the statement of financial position. And then you prepare the statement of cash flows. And then finally, the notes to the financial statement. These are the components of financial statement that the conceptual framework is talking about. So, statement of profit or loss and other comprehensive income. I'm going to explain why certain words are used here. Then we have the statements of changes in equity. Okay, so I'm going to present that to you as well on your screen. Now look at it to reduce the time in writing. So statement, you can see on your screen that we have the statement of profit or loss and other comprehensive income. We have statement of changes in equity. We have statement of financial position, and then we have statement of cash flows. Then after those four statements, we have notes to the financial statement. Now let me tell you something that is very interesting. This statement of profit or loss, the first one, statement of profit or loss, we used to call it income statement. In fact, we used to call it profit or loss account before we said income statement. And now we are saying statement of. The conceptual framework is so interesting that it wants all these accounts to begin with the word statement. So, statement of profit or loss. Statement, so you don't say profit or loss statement, but you must begin with the word statement. And there is a reason. Statement of profit or loss and other comprehensive income. Statement of changes in equity. Then we have statement of financial position. Statement of cash flows. Don't say cash flow statement. It is rather statement of cash flows. That is what the standard is saying, not cash flow statement. It is wrong. We don't say financial position statement, but statement of financial position. Statement of, all of them must begin with a statement. When it gets to the last one, we are saying notes to these statements. That is the fifth one, notes to the financial statement. So 5 different components. When you are asked in the exam about components of financial statement, we need you to mention these 5. And you need to be able to explain the purpose of these components. I'll come there. Okay, why do we prepare the statement of profit or loss? Why do we prepare the statement of changes in equity? I'm going to talk about that briefly. So these are the components. But when we talk about elements, that is different than altogether. The element has to do with asset, liabilities, equity, income, expense. I'll come there later in the next video. But here, I want you to know that when we are asked to write on the components are these 5. And what is the reason for preparing each of these statements? Now, let me quickly talk about it. The statement of profit or loss is a statement that is prepared at the end of the accounting year to show the profitability of the business. That is the statement of profitability. The statement of profit or loss. We are saying profit or loss, not profit and loss. That is another correction I would want to make. Statement of profit or loss. We don't say statement of profit and loss. If you are saying profit and loss, then it means that you can have profit and loss at the same time. But profit or loss means you can only have one at a time. You can't have both. That is the meaning. So it is statement of profit or loss. And the purpose is to ascertain any profitability. I didn't say profit or loss. I said profitability. Profitability refers to the ability of the business to make profit, which includes loss, also prospect. Then the next one is statement of changes in shareholders' equity. And the reason is to be able to determine the movement of the equity items on your financial statement within the accounting year. That is why we prepare that. So you should be able to explain that as well. And then when you are explaining the statement of financial position, it is prepared at a particular date. That is not at the end of the year. At a particular date to show the financial soundness, financial position of the business at every point in time. So it can be prepared at every point. That is why it is headed as assets. So the statement of financial position, assets. But when it comes to these first 2, it is for the year ended, because we wait for the accounting year to end before we prepare the profit or loss and then the changes in equity. But for the statement of financial position, it is headed as assets because it can be prepared today and will be amended tomorrow. We don't care about year end. But at the end of the year, it is prepared again anyway. Then when it comes to the 4th one, I said the statement of cash flows. That one is also for the year ended or for the period ended, depending on which period that is being demanded. But it is not like a statement of financial position. And the purpose of preparing the statement of cash flows is to be able to ascertain or explain the movement in cash and cash equivalent over the period, of which I have explained in my video of IAS 7. So you can go and watch that. And then there are explanatory notes to the financial statement. These make up the components, the components of financial statement as enshrined in the IASB's conceptual framework. This will bring us to the part 1 of our lesson on the conceptual framework. Okay, now in the part 2 we are going to continue from here. I'm going to talk about the content of the conceptual framework itself. There are 7 issues that are dealt with in the conceptual framework. I'm going to talk about them in the next video, and I'll take them one by one and then exhaust everything that comes under that. Remember to keep following and subscribe to this channel if it is your first time. Share this video, invite friends, and let others also have a benefit. And until we meet again for the part 2 of this lesson, it's bye for now. Thank you.